So I just wanted to talk a little bit about National Australia Bank's journey with integrated reporting. We've been doing a corporate responsibility report since 2004, and in 2009 I joined the bank in corporate responsibility. And we had an integrated committee that looked at the corporate responsibility report, our shareholder report and our annual financial report. And throughout 2009, fantastic. Now let's see if I can move it. Need a new button system. I've tried both. There we go. I'll skip that. During that year, we worked very closely to make sure that the three reports spoke to each other. Particularly the shareholder report and the corporate responsibility report had the same chairman's message, and we had a mixture of financial and non-financial results in both. We wanted to make sure that the three felt like the same company and that we weren't telling a different story, or that corporate responsibility seemed completely separate to how we were talking to our shareholders. At the end of that year, we decided that this does seem a little bit crazy. We're putting all this effort in to make sure that the three documents speak to each other. Why do we really need three? So we decided to go down an integrated reporting path. There was no such thing as the IIRC at the time, but there was murmurings of it, and Accounting for Sustainability in the UK were looking at it, and Nick was at PwC at the time and had been thinking a lot about it. So we started to talk to Nick and some of his colleagues in the UK and Accounting for Sustainability, and started to think about, well, what could we do if we brought these reports together? In the end, we decided to keep the annual financial review separate. It is very regulatory and numbers driven, and we decided to keep that as it was. But we took the shareholder report and the corporate responsibility report and pulled them together. So our first experimentation with integrated reporting was 2010, and in 2011 we really repeated the same exercise. I think we did a reasonable job, but it wasn't a true integration in that we still had business unit pages and various different corporate responsibility pages in those reports. At the end of 2011, we decided to join the pilot of the IIRC, and we got a much better understanding of where things were moving in South Africa and the types of guidance that Nick has just explained. So in 2012, we kind of did our first report in line with that guidance. We did away with business unit pages, we did away with corporate responsibility pages, and we truly integrated the report as much as we could. Following the kind of model that Nick's just explained of here's our business model, here's the context in which we're operating, here's our strategy in line with that context, here's our performance, both financial and non-financial, and here's how we govern ourselves. So we kind of really used a different approach, and corporate responsibility and all the non-financial metrics are weaved throughout all of those different chapters rather than having separate pages on their own. I think in terms of the rationale for doing this, not the best. Anyway, the rationale for doing this was to really ensure that we were telling a holistic story and we had a single source of truth. We felt that bringing non-financial and financial metrics together and talking about who we are as a company and what we believe in gave our stakeholders a much better understanding of who we are as a company and where we were going to. We also felt that it was a much more effective approach and was definitely a better use of resources to have one report rather than the two separate ones. So I think it's just got a lag. Here we go. So this was last year's report, just to give you a visual, and there's the contents on that second page. In terms of some of the... so one of the big challenges with going to an integrated report, particularly for sustainability or corporate responsibility, is that a lot of companies will produce anywhere up to 100, 150 pages of information, a lot of it driven by analysts and investors wanting particular data. So by going to an integrated report, the theory is to get it down to sort of a 30, 40 page, very succinct report. So there's a lot of information that sort of isn't able to get into those 40 pages. And as Nick said, it's really important to understand the materiality of the information you're putting in there. How does this actually reflect performance? How does that information impact performance and shareholder value? So what we did with all of the rest of the information was prepare a set of dig deeper papers. So in our corporate responsibility framework, we have customer, people, environment, supply chain and the community. So we have a number of different papers, up to 20 pages each, of all the metrics that the analysts and some of our other stakeholders could possibly want. While it seems like it's extra work, it really was all the work we were already doing, but put in a way that really investors can use very easily. It also ensures that we have all the information we need for the rest of the year. We've already got Ernst & Young doing the assurance over it, and we have that full financial view of the metrics. So actually it's made our lives a lot easier that we get a lot of analyst requests during the year and we already have the information ready for them. We continue to be a GRI reporter, so we continue to do the index, and we have a lot of information on our annual review website, which includes case studies and some of the things that weren't necessarily going to make it to the report. We also started to do social return on investment reports, trying to think about how do you measure the outcome rather than just the input of some of the things that we're doing. It's a very, very difficult question and very difficult with a lot of the non-financial things that we're doing to measure the outcome, but this is something that we've been experimenting with. So some of the projects that we do in the community space, we're starting to look at, for every dollar we spend, what's the actual economic and social return.